Welcome back to today's Daily Dose of Market Insights. Kelvin here. Very good morning. Today will be the Tuesday, the 29th of October 2025. So as usual, before we kickstart our gist of the Daily Dose, let's have a quick look at the disclaimer first. All right, just to make sure that everything is okay. Okay, leverage trading carries a high, just hold that. I think the thing is good. Yeah, good. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. Okay, so as usual, before we jump straight into today's chart of the day, let's have a recap what has taken shape in terms of the relevant news flow economic data release that has occurred yesterday, and as well as in today's early Asia session, if there's any, in terms of their impact on the respective broad-based cross-asset classes intraday movement. So let's start with the US stock market first. So the US stock market yesterday continues to bask in a bullish limelight, I would say. One second, let me go to the price section. All right, so what you could see on the screen over here is that the major US stock indices, all of them close in a green, and the so-called all the four major indices managed to actually surge a fresh all-time high on the SPX, the Nasdaq 100, the Dow Jones Industrial Average, and together with the Russell 2000. And the top performer yesterday was the Nasdaq 100, up 1.83%. Why? Because of this ongoing AI optimism news flow that has taken shape yesterday. So what I could see over here is that we start to see a slew of deep green surrounding the semiconductor sector. So among the four mega cap over here, the semiconductor sector is up by 2.81%, together with the communication services, which is also part of this AI optimism play as well. Alphabet is up by 3.62%. And one of the reasons yesterday why the semiconductor slash AI related stock play is what I call it Busk is leading the fort yesterday is due to this positive news flow out from Qualcomm. Okay, let me bring it over here. So that you guys could have a better view of the charts. Yeah. All right. So Qualcomm source after taking aim at Nvidia with new AI chips. All right. So let me expand it. Okay, so Qualcomm actually unveiled its new AI 200 lineup, which will start shipping next year, with the first customer being Saudi Arabia AI startup Human, over based on this news flow. So that actually created a positive feedback loop into the entire AI related stock team play that causes the semiconductor and as well as some of the communication services sector stocks like Alphabet, which is also part of this AI team play, to take a leading position in the US stock market session yesterday, hereby causing the Nasdaq 100, which is heavily weighted in which has more heavyweight into these stocks, outperform against its peers yesterday, up 1.83%. So very quickly, let's have a quick update on the S&P 500, the Nasdaq 100, as well as the US Wall Street 30 technical levels. Just very quickly over here, since that the price movement has already moved yesterday. So what we could see over here is that Nasdaq 100 yesterday, we do have one resistance level at 25,940, 26,020. Before the then thereafter, the next resistance level to watch will be 26,250 / 26,340 next. So what I could see over here is that yesterday it continues to have a bullish acceleration over here, giving no signs of a minor pullback as it now approaches the upper limit of this minor ascending channel upper boundary and coming very close to our first resistance level. There is a risk that in today's Asia session there could be a slight pullback. So this slight pullback, the first support level I'll be watching to maintain my bullish bias will be at 25,640, and I would tighten my pivotal support that we should have yesterday at 25,225, to be adjusted upwards to the gap support that it has yesterday, where it gap up at the start of the Asia session, which is at 25,420, to maintain this ongoing bullish biasness, hereby hitting a new potential resistance thereafter at 26,250, 26,340. So that's for the Nasdaq 100. And if you look at the SPX over here, also very similar. The SPX also did a one-way ticket up in at the start of yesterday's so-called US session. Okay, let me put it over here. So this is the SPX 500. So the SPX 500, I will also tighten my short-term pivotal support level towards the gap support that it has left during the start of the Asia session yesterday, 6,810 level. So two resistance level to watch out for today, in any case of a minor pullback in first step. So minor pullback, first support level to watch will be 6,850, given that the RSI is also at a rather extreme overbought level. So this RSI level yesterday, it hit an extreme overbought at 81.6, and this extreme overbought is coming very close to the overbought level that previously left it at this level over here, 84.61. Okay, 84.61. So during this point in time, when it hit this 84.61 over here, all right, price action didn't actually react that much, except that it starts to do only a minor dip before going up higher and higher. So what you could see over here is that we will still be a bit cautious over here, because I don't want to tighten my pivotal support to be so tight. All right, because the only key support level to watch out for will be yesterday's US session low, which is at 68.50. So that will be my first support level to watch over here. So that will be my intermediate support level, but key support level for sure will be the gap support that has left during the start of the Asia session, where it gap up. So this will be the gap support 6,810 to maintain this ongoing bullish biasness over here. Just in case of any whipsaw, it shouldn't surpass below 6,810. And the next resistance level to watch after 6,920 will be 6,940. So very quickly, the US Wall Street 30. So the US Wall Street 30 over here, what you could see is that it did a minor pullback. All right. So this minor pullback actually managed to hold above our intermediate support at 47,360, 47,280 level. Still using this minor pullback, this intermediate support level to maintain my bullish bias over here. Next resistance level to watch will be 47,890, 47,890, 47,960 next, followed by 48,190, 48,240 for the SPX. So pivotal support, I don't want to tell it to be so tight or at this 47,280, just in case of the whipsaw. So still maintaining at this clear previous range, previous minor swing high area of 23rd of April, and also 3rd of October, where previously the bulls did a fierce test but can't break above it, but finally did a bullish breakout, now turns into a critical pullback support at 47,087. That will be still my pivotal support for now on the US Wall Street 30. All right, next up will be the FX market. So for the FX market, as I mentioned earlier on, the FX market on last Friday didn't react so much significantly in relation to that cooler than expected US CPI data. So there's a bit of lagging behind over here. So what you could see over here is that the FX market on Monday, yesterday, finally did that post a cooler than expected US CPI reaction by seeing across the board dollar weakness over here. So the dollar inches down lower. So what I could see over here is that do cautious that previously I also mentioned that the dollar yen is doing that kind of residual fifth wave push up. So this fifth wave push up has really been hit its trajectory. Later I'll share with you dollar yen as my chart of the day. But most importantly, what we could see over here in the short term right now, the dollar finally starts to react to that cooler US CPI data that were out on last Friday. A bit of lagging, we call it lagging effect, and causes the dollar to trade at a weaker side of the story on yesterday's start of yesterday's European session. So you look at the one-day rolling performance, the last 24 hour, the dollar now is trying to do a bit of rebound over here. But if you look at the 5-day rolling performance, the trend of the dollar picture, okay, let me go back to 5-day. It starts to actually inch downwards according to the dollar against this major currency pair. So if you look at the US dollar index over here, very clearly, you start to see a bit of hesitation by the bulls to start to see a series of these kind of spinning top light candlestick. That means a very small little body with a lot of hesitation by the bulls to actually push up higher as it try to actually shape a lower low. All right, a lower high, this lower high, as it's uh, as it actually trade very close to the upper boundary of this ongoing medium-term symmetrical triangle range configuration as depicted by these two gray line here that has been in place since the low of 1st of July. So in terms of technical analysis perspective, what we could see is that a bit of, I would say that there's hesitation by the bulls to push higher. That means perhaps right now we are now heading back down towards the middle part of this symmetrical triangle range configuration again at the first support level at 98.05 as we head into to this week key risk event, which is the FOMC meeting and the FOMC press conference, which Fed Chair will actually try to guide the market participants, and market participants will be hearing his view, especially on the current state of the government shutdown, impact on Federal Reserve decision, and also in reaction to that cooler US CPI data that is out on on Friday over here. So from a shorter term perspective, right now, let me share with you the chart of the day for today, which will be the dollar yen over here. So before that, let me expand my screen. All right, let me expand my screen so that you guys could actually have a better view of the charts. Yeah. Okay, good. So for the dollar yen over here, let's go very quickly look at the dollar yen. All right. Yeah, this is the dollar yen. Okay, so the dollar yen, previously I shared with you there's this 1, 2, 3, 4, 5, fifth target at this 15320, 15365/90, maximum 15450, which is the major resistance of the dollar yen. So very quickly, what is 154.5? What is 15450? Why is it a major resistance? Because this 15450 confluence with this ongoing major descending trend line that has been in place that kept previous dollar yen bulls in check since the major swing high of 3rd of July at 2020 at 2024. So upon hitting around this 161.95 level, there's a lot of verbal intervention, and also finally there's a physical intervention that took shape that causes the dollar yen to actually plunge significantly from July 2024 all the way down to September 2024. At the trigger of this plunge of the dollar yen was due to MOF, the Japanese Ministry of Finance, instruction of towards to Bank of Japan BOJ to intervene in the FX market by buying up the yen and selling the dollar. So right now it's coming it's approaching very closely to this major resistance level. So on the shorter term over here, what we could see is that we start to see this bearish reaction of the first of the 15320 level, and also a fifth wave target of 0.618. So what I could see over here is that yesterday it has this bearish divergence that has taken shape. All right, this is bearish divergence taken shape, and also price action starts to break below that tighten pivotal support level as well. As we are speaking right now is 15245 and try to challenge it over here. So with that, I will actually now flip to a intraday bearish stance for the dollar yen, given this negative price action that is the latest that is currently showing right now, potentially hitting a fifth wave target at 15320. So at least there could be some form of retracement back towards the 20-day moving average again. So from a shorter term perspective, we will flip to a bearish buyer stance for now on the dollar yen using 15320 as my short-term pivotal resistance level. Three key support levels to watch out for today: 152 figure level over here, followed by 15150, maximum 151 figure level, which confluence with the rising 20-day moving average. And if we do the Fibo retracement of this last 5 wave up, that also considered very closely to the golden ratio at 61.8%. Only a bullish reversal and the hourly close above 15320 will invalidate the bearish bias for today on the dollar yen and resume its upward climb towards 15365/90, maximum 15450 major resistance level on the dollar yen. All right, so now that's for one of the chart of the day. And other chart of the day I will share with you all with more pertaining to gold price. So if you look at gold price over here, is that yesterday gold actually did a rather bearish reversal price candlestick over here. So despite a series of rather so-called bullish hammer that was printed on Wednesday, Thursday, and Friday. And on Monday, yesterday, it actually has a bearish breakdown below 4,056 level, and also it has a daily close, not hourly close, a daily close below the rising 20-day moving average as well, and also a daily close below the previous lowest low of this three daily hammer stick candlestick pattern that was being formed on Wednesday. So Wednesday, the hammer low among the three hammer that is being formed on Thursday and Friday. The lowest low of among these three hammer was on Wednesday, which is 4,004. So yesterday price action also has a daily close below 4,004, which is at 3,982 over here. So given the fact that from a technical perspective, this could actually signal a start of a multi-week corrective decline for Gold XAU/USD, given the bearish price reaction that has taken shape yesterday, which I explained earlier. So with that bearish breakdown of the key support level at 4,056 and bearish breakdown of the key technical elements, which is the 20-day moving average, and as well as among the Wednesday, Thursday, Friday, three daily hammer candlestick broken down below the lowest of them, which is the 4,000 this level here, which was this Wednesday low, which is at 4,004. So with that, I would respect the current bearish price action of Gold XAU/USD. So this will be my chart of the day as well for Gold for today. So given that it has broken down below that 4,056 level, broken down below 20-day moving average, so we could be now enrolled into a bearish price reaction for Gold. That means potentially kickstarting a multi-week corrective decline in first step heading towards the 50-day moving average, acting as the next support level at 3,770. All right, 3,770. So in first step, I would be having a bearish bias for today for Gold XAU/USD, using any bounces as a bearish bias to fade the bounce. Key short-term pivotal resistance level for Gold will be at 4,062. So that will be my short-term pivotal resistance level, as well confluence with the 20-day moving average as well. Two intraday support level to watch for today will be 3,943, followed by 3,895/3,864. And also if 3,864 doesn't hold on the downside, further weakness could be exposed for Gold, heading up towards the next near-term support level. This 3,000, give me a minute, 3,800, right? Coming also very close to the 50-day moving average as well. Okay, 3,800. Right, so this will be the next support level to watch, 3,800. And if you do the Fibo extension on the downside, take it down for the fresh all-time high as 4,380, project it downwards to this low, put up to here. Okay, that also constitute very closely to the one-time Fibo extension as well at 3,780. All right, 3,000, so 3,800/3,780, which is also confluencing very closely with the 50-day moving average. All right, over here. So now this could be the start of a potential multi-week corrective decline, given yesterday's significant bearish reaction and the break of key elements on the daily Gold chart. All right, so that's for Gold XAU/USD. However, hourly close above 4,062, that will invalidate the bearish bias and see a recovery back again towards 4,155. So only a breakout above 4,155 could potentially reinsert the bulls back into the picture to re-establish a stronger movement, a firmer uplift towards 4,003, followed by 4,267 in the first step. So this will be Gold flipping to a bearish bias. It will be featured as my chart of the day as well, given yesterday's significant movement. So that sum up the second part of the daily dose. So let us move on to the third part of the daily dose on the events to look out for today. So today economic calendar, in terms of key event to look out for today, If you were to go to Tuesday, will be also a rather quiet session as well. So Tuesday over here, when we kickstart the European session, we have this JFK consumer confidence data compiled by the JFK research body, or what you call it in Germany. So that could potentially influence the euro dollar and the euro crosses, and as well as the Germany 30 index over here. So market is sorry, this is not Tuesday. Okay, minute. Yeah, Tuesday. Yes, it's Tuesday. Just to confirm. Right, at 3 p.m. Singapore time, market is expecting almost the same figure at -22 from -22.3 that was printed in the previous reading. All right, then as we head into the US session, it will be a rather quiet US session. No US Federal Reserve speaking, as they're now hitting a blackout period ahead of this tomorrow FOMC meeting. All right, so then thereafter we have this conference board consumer confidence data will be not released due to the government shutdown over here. Because there's no timing, so it's rather likely will not be released due to this ongoing government shutdown. All right, so the next one will be on before the start of our daily dose at 11 a.m. on Wednesday. You have Australia key data to look out for. So there will be Australia quarterly inflation data for Q3, and as well as at the same time, you will have the monthly CPI indicator out for September. So this gives us two horizon of inflation data reading. One is more of a backward looking in the past for Q3, and one is more kind of a bit of forward looking, taking into account of the inflation data for the previous month of September over here. So both market is expecting a slight uptick over here. So even for the if you look at the trim mean means core. So for the core CPI quarterly one for year on year, market participant is expecting no change at 2.7%. But however, for the monthly CPI data annualized rate, market is expecting a slight uptick for the month of September to 3.1% over here. And also that should sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.